Good morning, folks. How are you? If you are a subscriber to my Twitter or X, if you could give me a 5x5, let me know that the audio is good. Thank you, folks. Appreciate it. All right, so we're going to be doing some things today that hopefully will inspire you to be more involved with your price action study and a proper use of your demo account. Okay, so um, I'm going to teach you a price action drill that will help you also understand how to use limit orders, Caleb. And for anyone else that has not ever grown comfortable using a limit order for your entry, they're, in my opinion, they're the pinnacle of knowing what you're looking for. So having a market order, I do that market order entry mainly to satisfy, to the best of my ability, the folks that would watch my recordings like I did last night. I traded Asian stocks. I'll review that trade, by the way. The Actually, that's the first thing I'll do after I'm done this little monologue. Okay, we'll go right into that, and then you'll see what I do and why I do what I do on TradingView. And it'll all make sense in a couple of minutes. But the market order that I use to enter and always add and pyramid my position up is to showcase that I'm not using market replay, and I'm always highlighting and hovering over top of the little green button up here. And one of my students made a point about how they themselves, even as a paid student, were like, can you remove any of the doubt? Because you could be using market replay. And I'm like, I wasn't even aware that market replay was a thing. But I started showing this little status button here. And I always toggle it so it tells you how much time is left while the market's open. And you can't pull that up when you're using market replay. So I don't generally use market orders to get in. I do that to allow for my entries to be a little bit off, not as precise as they would be if you were using limit orders. And we'll be looking at that today. Okay, so there's going to be a whole lot of button pushing today, buying and selling, buying and selling, buying and selling. It's going to be a lot of it. And it's meant to show you how I got over the fear of selling short. I had to desensitize myself, to getting into a short position because I didn't understand how to do it in the 90s. I was afraid to do it. Didn't make any sense for me to sell something I don't own, and how can I buy it back when I didn't own it in the beginning? So it was very hard for me to understand it. And what I tried to do was I tried to create a game out of it, and it was something that I would do on paper. So I'd have to write down what my hypothetical entry would be, and where my hypothetical stop would be, and where my hypothetical take profit would be when I would use end of day data back in the 90s when I first started trading commodities. And I would go through and back test every example like that. So my hypothetical fill, not factoring spread, obviously, I would always use the opening price of whatever candlestick I was using for like a bearish order block. I would use the opening candlestick's price, and that would be where I would try to sell short at. So for back testing purposes, that's what I would do. Now today, all of you have the luxury and benefit of having more resources to trade in a practice account where you have live data formulating and creating these individual candlesticks dynamically. So you're seeing something that, like people like myself and older than I am, where we were literally using paper charts that we hand drew individual candlesticks. Like that's how we did it back then. So I'm going to show you how I have taught my private mentorship students and how I would teach individual one-on-one. So when I used to do, long time ago, when I used to do one-on-ones, this is how I taught my students how to desensitize themselves. Because do you ever fear getting into a trade? I mean, chances are you probably had that feeling before, where you feel confident that you know where the market's going to go. You feel confident that it's about to do that move where you think it's going to run to it, but you're just reluctant to push the button. You're just afraid. And I had to overcome my fear of being short. Now, as a buyer, because that's predominantly what I was doing in 1992 when I first started, I could just go in there and just buy because I didn't care. I thought that everything was going to go up based on the indicators I had. So I didn't have any fear whatsoever. Even if I took losses and even if I blew accounts in 90s, it's something that was not as scary for me as it should have been, because my desire to get out of the rat race, my desire to learn how to do this consistently was overwhelming by contrast to the fear that I would have had and at the time experienced. Because it wasn't like I wasn't afraid. I was afraid, but it was so small in comparison to my driven passion to get the hell out of the rat race of working, because I worked a lot of hours and worked 6 days a week. So every waking moment, every chance I had to study price, to study the markets, I was pouring myself into it. But I still had an under the surface fear of entering trades. Like that was there. It was magnified extremely, almost to a degree of paralysis, when it became time for me to want to start being a short seller. And I had to do that because the market was changing and it was going into bearish conditions. And every time I would try to take a long, it would slap me down. And if I'm only going to be a perma bull, meaning I'm only going to try to be a buyer only and never try to be short selling, either I'd have to sit on my hands a whole lot more than I was willing to do, or I'm just going to have to concede and say I'm not going to be profitable and I can't trade. And that wasn't going to be the case. So I had to go in and look for ways to do what my mentor, Larry Williams, said he had to do. He just said he just took trades, just kept pushing the button, and he didn't care whether he made money or not. So I was like, I'm going to try that. I'm going to try to do that and desensitize myself. And it wasn't easy. It was very difficult to do that. But you have the benefit of having a demo account and a paper trading account where you can do actual executions. Like I'm going to show you today. Like we're going to do a lot of them today. I want to remind you that these are drills. Okay. This is to, number one, teach Caleb how to enter with a limit order. And those of you that don't know how to use limit orders to get into the marketplace so that way you can get really good pricing for your entries, for your longs and your shorts, you're going to learn that today. It's a very short, simple little process. But I want to remind you that what we're going to be talking about and what I'm going to be pushing the button on today, they are not meant to be viewed as trades, okay? These are not Robin's Cup, World Cup entry type trades. These are not the entries that you saw last night. These are going to be simply going in and trading off of intraday volatility. You're going to see me lose trades today, okay? It's going to happen. It's not the point of making money today. It's not the point of being accurate. It's the point of you seeing how to practice engaging price action. And you do this every single day for weeks up to a few months. Every single day you should practice it like this. I still do these types of things. Even though I can trade with real money and make real money, I will go into the demo account and paper trade these drills. I'll do it several times a day whenever I'm bored. It's like a form of meditation. I'll go in and I'll run executions. I'm doing it because it keeps me fresh. It keeps me tied into the marketplace. It's the first thing I do when I come back from a vacation. It's the first thing I do when I come home and we've been away from the home, or if I've taken a day off, or if I've been sick, if I have just had a longer time away from price action because of some kind of economic counter that said, this is not something I want to be a part of. Typically, it's a non-farm payroll week. I teach my students this very week we're working in here, you want to be done trading by tomorrow at 11 o'clock. So If you haven't made your trades in the index futures by 11 o'clock tomorrow, my students that are brand new, not the mature students, not the ones that have learned their model and know what they're doing, the brand new students, the people that don't know their own model, that don't know their way out of a bad situation in the marketplace, they are the ones I say not to trade on this week, Wednesday, Thursday, and Friday. You absolutely can use my concepts to trade after non-farm payroll. You absolutely can trade after the 8:30 news event on Thursday, which is a preliminary adjustment on the employment data from the previous month. Those 2 days, Thursday and Friday of non-farm payroll, they're very manipulated. But if you know what you're looking for and you're well versed and you're mature, you've not just recently started watching my videos, then yeah, you can trade those days. But when I talk, I take this idea of, you can hear my puppy snort again. Hang on one second because its scale's getting really loud again. Hold on one sec. Little lumberjack here. Hold on one sec. Sorry about that. Had to grab my glass of OJ. I forgot that I was on the counter. So we now will have to get up to get that later on. So these drills today, okay? I'm going to type it out on the screen very obnoxiously in bold because I absolutely know that trolls are going to take these portions of the video and they're going to say, see, ICT can't trade. See, ICT can't find a winning trade. See, ICT can't do this. And they're going to take it out of context, okay? I want you to understand the purpose and the premise of today's live stream. It is to teach how you can overcome fear of entering into a trade. If you do this drill every single day, 15, 20 times, at minimum 10 times a day, okay? And you'll see by using smaller time frames, it's very easy to do it. You don't need a whole lot of time invested. I did the drill with my students the other day for like an hour or so, and I did 10 of them. And I didn't know, let's be honest, I did 9 of them. I had to come back later on at the end when I said I was finishing the session. I wanted to round up to an even 10, so I did one more exercise of it. But I would enter a trade. I would show them where I was in the trade, where my limit order would be to take a profit, and where my stop loss would be. And I did not care, absolutely did not care about any predetermined bias. I was literally working with the intraday volatility in Asia of all sessions. It's not even that typically is a session that's volatile. But when I do the trade review that I did for last night's example on Twitter, I'll explain why and how you can start looking for Asian session moves, because I'm sure that's probably come up in your mind. Like, how do I know when these sessions are going to have these types of runs, and when do I try to avoid them predominantly? I'll cover that today. So I could have added that to the title, but I'm not sure if the title would have fit if I would have said everything I had in the label, entitling it saying limit orders and volatility pinball drills and how to trade Asian session. It's a long-winded title. So I think the title is enough to intrigue people to want to click and listen to it. They're probably not liking this big long monologue, but that's just the way I roll. And if you don't like it and you can't sit through that kind of stuff, I'm probably not going to be the right mentor for you. But go use somebody else's methods and stuff, lose money, and then come back and you'll be more prepared to listen. So as a reminder, you're encouraged, if you're watching it live, okay, because it's going to be interactive, it's going to be a interactive study where you're going to feel what it feels like to be in constant buying and selling, and executing with limit orders, placing limit orders as an exit. And you're not using a market order. You're not allowed to use a market order. You're not allowed to save the stop loss. As soon as we put it on, it has to get stopped out or it has to go to the limit. So one of those orders have to happen. And what you're going to be doing is you're going to record and journal what it feels like for you watching price either pan out to the target or getting stopped out. It's really important for you to write down what you feel. Now, I'm going to tell you right off the top of the list, what's going to happen is it's going to feel weird that I'm putting these trades on with no real logic except for where's the closest buy side and sell side on a very small time frame. That's all this is. This is not a trading method. One of my students in one of the user groups was like, can we turn this into a trading model? Because I made like $3,800, $4,000, back and forth. And I showed losing trades too. So I want you to think about how if you can look for small, tiny little microstructure liquidity pools, and you have just small risk involved. You're only going to be using one contract. You're not allowed to use two. You're not allowed to be pyramiding. This is not what this is about. I'm going to teach my son pyramiding in this mentorship. So that way he has the lessons and you also have the lessons, okay? But for this purpose today, we will only be seeing ICT do one contract. I will be buying and I will be going short. And we'll do this for a length of time until either I get bored with it or I've accomplished the method, which means that I'm going to have to at least do 10 of them. So we're going to spend some time today looking at intraday volatility. I am not trying to frame a bias. I am not trying to go into the charts and say, here's what I think the draw on liquidity is on the hourly chart, the daily chart, the weekly chart. We're not going to refer to that with the drills. Okay. It's literally going to be a 15-second chart with a 1 minute and 5 minute basis. Okay. So when it's something that I can use on a 5 minute chart, I will show it to you. But predominantly, I'm going to use a 1 minute chart. It is not underscore. It is not. And when you see people go out there making YouTube videos, okay, or they're showing on social media that this is a model for trading, this is ICT's Enigma. It's not Enigma. Okay, it is absolutely not Enigma. My private mentorship students were asking if this was Enigma. No, Enigma doesn't lose like this. Okay, this is a drill. This is to accomplish getting over the fear of executing and entering. It's to give you a baseline evaluation and foundational read on you internally. What are you feeling when you're in these types of executions? Are you emphasizing the need to be right because that's a problem? Are you emphasizing the desire inside to close your trade because you don't want to get stopped out because that means you're wanting to be right? Are you fearful of having losing trades more than a winning trade, but still being net positive? That's a problem. So all these things are going to help give you a baseline evaluation on how you think. But it's also going to train you how to use limit orders properly because there's no more market orders. Market orders are just for me to prove that there's no market replay being used because in the upper left-hand corner, when you use a market replay, you don't see the buying and selling buttons up there. They put them down here in the lower lower right-hand corner down here. I don't have the luxury of doing that with live data. I have to use the entry buttons up here, and that's why I do that. But when I'm trading with real money, I'm trading with limit orders. The only time, and this is I got this from my mentor, the only time you have my permission to use a market order is to get out of a trade that you absolutely know you're offside on or it's about to turn on you. Just completely close it and do market order like that. Done. Simple. Because if you don't know what you're doing, It's going to be illustrated with you constantly just using market orders. And if you don't know what you're doing, you're going to be trading without a stop loss. So hopefully after today, you will not be fearful of showing your examples without a stop loss, where your trade's still running and it has open profit and you want to show everybody that because you want a dopamine hit. Stop doing that, because you're actually you're teaching and training your body and mind to anticipate some public reaction and response to support you. I share these examples like I did last night because number one, I think that it's helpful to see the logic that I have, also introducing something that's a little bit more advanced. And like I said, I'll cover it. I'll actually teach you what the indigo entry method is. But it's a slap in the face to supply and demand. So really what it is. And the idea of you getting into a trade, how you overcome that fear, I'm teaching you how I did it. Nobody taught it to me. I didn't learn it in a book. I was just passionate about getting over it because I was tired of being afraid of it. I wanted to do it. I knew I had to learn how to be a short seller. And this was my method of accomplishing getting over that fear. Maybe you don't have the fear of getting into a trade. Maybe just you don't have that fear. And that's great if you don't. That's wonderful. But eventually, if you start trading with size, that means you're trading with more contracts behind the position, or lots if you're trading Forex. You're going to have that fear come in. It's going to happen. At some point, you're going to hit a threshold where, okay, yeah, I could do one contract. Yeah, I could do 5. I could do 10. Wait a minute, 20, you said? Wait, 50 contracts, you said? Oh, I don't know about that now. That's a little scary. You'll eventually hit that barrier where you're afraid. But what you'll have to do is lean on your experience. Well, some of you that are brand new, you don't have any experience to lean on except for just clicking a button on the demo account with no understanding of what you expect to see. You just want to find out what happens when you do it. That's a waste of a demo. That's a waste of your time. You're actually giving yourself bad habits, toxic thinking, and you're anchoring the expectation to the result of the trade versus, am I following a process? Am I following a methodology, a model? Am I doing something that with probabilities and statistical results that I can measure in the past? That's back testing. Am I following something that I can trust in regards to sticking to this and then trusting that the outcome will be favorable for me over a period of time, not just the next trade? So it's important that you understand when we start doing these drills, when you're watching me do this, you're encouraged to do the same thing. Now, jacklegs out here are going to be trying to do the opposite. And they're going to say, see, this is the trade ICT was taking, and this is what I was doing the opposite. We're doing nothing about a competition today. That invitation is still open, but that's not what this is today. Today is just teaching my son how to get in with multiple executions. And then it also helps you read price action. And if you journal every single session you do like this, like in your progress of journaling, my advice is for you to have either a 3-ring binder, if you want to be like me, which is high touch over high tech, or in your high tech devices where you're journaling, have a section for price action drills where you're literally going in and doing what I'm going to show you today. And then what you'll do is you'll have a first day of doing it, baseline. Now, you can't take that today as your experience for you because you're encouraged to mimic what I'm doing today. So you already know that this is not a trade signal because I never tell you to take a trade. I don't ever want anybody copying me because it gets under my skin. Like I don't want someone to be able to say that they took the same trade. And when I see people say, oh, you took the same trade as I did, or I took the same trade as you did, and you didn't show me your execution, you don't see your executions, and you ain't proven that you need market replay, I'm not going to like your post. I'm not going to heart it. I'm not going to comment on it because I don't believe it. And nobody else should believe it either. So because I'm very guarded with my executions because there's nobody out there doing them like mine. I have students that can trade well with my concepts, but they're not going to have my executions. They're not going to have it. So today you are encouraged. You're absolutely encouraged to mimic everything I'm doing. I'm going to walk you through it so that way you'll be able to put your limit order in before price gets to mine. So it's not going to be like you watch mine get filled and then the delay in the live stream that you can't catch up or keep up with it. You're going to have plenty of time to do everything I'm willing to do in front of you today. Okay. My goal is not to win more than I lose. That's not what the the procedure is not based around that. Okay. Before we're done in 2024's mentorship, before the end of this month, you will see me trading live. It'll happen in front of you and it'll be with the context. But before Caleb can do that, and before we even get to that point, I want to at least bridge the gap between not knowing how to use the limit orders, and it's what he has now, and also how he should practice. And because you're all eavesdropping and listening, watching and training with him at the same time, you're getting the experience just like he is. And sometimes if you're here live, he watches the video after the fact, and you have the benefit of being here live. So you actually have a little bit more advantageous position than he does because he works. And his schedule doesn't afford him to always be watching the stream live or sitting next to me. So hopefully I've beat that to death enough to know that when I type it on the screen, these are not live trades. These are not something to be profitable on. It's simply to desensitize yourself. Desensitize yourself from the outcome of the trade and just keep doing the entry mechanism. That's all it is. It's to practice that. But when you start journaling and you log them every single day, at the end of the weekend, you should look at what you're doing in your practice sessions. And what's going to happen is your eye is going to start jumping to setups that you keep seeing repeat doing this drill. And what will happen is you're going to see setups that you've never noticed before because you have either got stopped out in this drill exercise and you watched it pan out in the opposite. And then it illuminates that idea. Wait a minute. I see that. And then what you'll do is by like a default, your subconscious will jump to, this looks like the last time I saw that. So now I'm going to do the drill going short, not go long. And then what will happen is you will start seeing a progress where in the beginning, you're probably going to have a whole lot of red losing executions. And it's not to hurt your feelings. It's not to make you feel bad. I'm certainly not going to be embarrassed today if I have losing trades. That's not the point. The point is you're getting experience pressing the button and you're giving yourself a baseline evaluation. But you can't take today's data as yours. That's you just copying me. And I'm going to have losing executions in this. So you can't look at that and say, I did something wrong. And you can't look at the ones I do right and say, I did something right. Speaking of yourself. So it's me doing it, but I'm asking you as the viewer to do the same thing I'm doing. But you are to write down what you're feeling when it happens. Are you embarrassed for ICT the Mentor when it gets stopped out? Are you encouraged when it works in your favor? Are you trying to make it out to be more than it really is? Are you trying to think that this is some kind of a new model that I'm leaking? No, this is not a subliminal signal service either. Okay. All it is just an exercise and a drill that I encourage all my students to do this every single day. If you can do it multiple times, like if you can do it in the London session, the New York session, the lunch hour, and the PM session, do it. You have no excuse why you should not be practicing. Every single day, you should always practice. I've been doing this for a long time, and I still practice. I absolutely still practice. Tiger Woods still goes out there and he practices his drives and his putts. I mean, think about it. You gotta keep the skill fresh, and in price action, it's no different. So it constantly keeps you tied into the marketplace. So I'll give you enough monologue. Let's get into it now. The daily chart here, it has a lot of annotations. I apologize, but we'll get to it. Yesterday during the live stream, I talked about how on the weekly chart, this was a potential draw that opened up the week for me as a initial bias where I wanted to aim for something in that direction. And I also mentioned there was a small separation between the body of this candlestick. Let me take these drawings off just for a second again. I apologize. And again, this is a daily chart for NASDAQ, December delivery, 2024, daily. And this candlestick's body to this candlestick's body, that separation between the open of this candle and the close of that candle, that is by definition a volume imbalance. If, and this is something I had to come back and retouch on today because I didn't like my description of this because it wasn't sufficient. more accurately is when we have a volume imbalance like this, and then the candle that creates the first candle that makes the volume imbalance, like we have here, this would be candle 1, this is candle 2. If candle 1 has a volume imbalance to the left of it, like it does here, and the body is inside of this candle and this candle body, as we see here. In other words, this candle's open, this candle's closed. The candle in the middle, its body is inside those 2 price points. Okay. This is a very specific PD array. I'm not going to tell you its name because everybody's going to go out there and start making books about it. But I'm going to teach you something else about this very particular PD array in a book. You don't need to buy my need to buy my books. Okay. Once the books are in print and they're in circulation and people can have it and it has an ISBN number attached to it, I will talk about those things on my YouTube channel. So again, it's not a pitch to buy my books. I'm not going to get rich by you buying my books. I'm only doing it so we can put it in print form, in its true form, because a lot of people's already put out my stuff in incomplete fashion, and they're going to look real stupid in a couple months when it's by contrast, their books are horseshit. But this PD array is inside of a volume imbalance and a previous volume imbalance. This candle's body has to be inside of the 2 candles surrounding it when it's surrounded by a volume imbalance on both sides. So as I told you yesterday, you would note that by encompassing the first to the second and then draw that out in time like this. Okay. So this is a specific PD array and we can use this information. Now I'm going to take that off and we're going to go back and add the drawings. And now in this area, I'm going to add it back like this. And then I'm also going to add the Fibonacci so I can put the quadrants on it, because we grade everything in ICT. Grading is where we take a imbalance or a price range and we put it in a measurement of where's equilibrium, the halfway point, and the quadrants within it. So that way we can anticipate. We're not reacting to some kind of thing in the future. We anticipate PD arrays forming around these quadrant levels. Oh, what does that mean? Well, you're about to find out. So if you put the fib on, the low to the high, and then you add the quadrants, and I'm going to thicken this up a little bit, make them a little bit obnoxious. ICT, something obnoxious from him? No. So we have this area that I mentioned yesterday in the live stream. Okay, and it's towards the beginning when we were still talking about the daily chart, so you can go back and find it. It's there. But this portion of that is something I didn't cover yesterday because I was trying to get through this stuff until we got into reading the real price action live. But now I can go back into a 1-minute chart. And we're going to go over to Asia last night. All right, so using the PD array that I outlined in live stream yesterday, not cherry picking, not form fitting, not trying to find something to justify, because ICT has something to always explain something so it can look right. It just so happens that I'm so fucking good that I look right all the time. That's the problem. It's a superiority complex for people. If you have that problem, it's something for you to work out. But here is the details. Here is the high. And before I did the trade, I went to my private mentorship students and I told them, I said, annotate 20,287. Now, that's no different from me being on Twitter when I used to go note this level. So what I'm indicating is that's where my focus is at that given moment. I want to see, does the market provide me some kind of a framework? Does it run to a pool of liquidity? Does it run to an inefficiency that is a discount? That's what's implied by that. I have to see the setup form in price around the time of day that it should form. So if I'm anticipating, not reacting, if I'm anticipating a run to take out this liquidity, or just to simply reprice to it, which is all I was willing to do because I wanted to get to bed last night kind of early. And Asia, for the working class heroes like in the United States, if you can't trade any New York session because you're working, or you can't get up early enough for London because you have to go to work, and work prevents you from having sleep deprivation, or you're at work and you can't trade the PM session or the lunch hour in New York. So what does that mean? You're kind of like limited just to Asia, right? And today I'm going to talk about, this will be the last thing I'll talk about before I close the stream out, but I'll teach about Asia and when to anticipate Asia setups that you can go in and at least reasonably expect that you'll have something that you can trade and it's favorable. Not every single day in Asia is something good. Okay, so I'll kind of give you the talking points for that today and then close the stream out with that. We're going to be together here till probably 10:30. So like I told you, these are going to be the longest ones of all of the 2024 mentorship. But you want to learn, this is what it costs. It costs a little bit of time. So if you recall on the daily chart, this blue shaded area I drew out, that's what is represented by both of those volume imbalances. Okay, from the high of the box down to the low of the box. All these other levels in here are just simply levels that we used yesterday in the live stream and or mentioned where they came from, which is the new week opening gap, and obviously this is the new day opening gap here. Notice that in this price action in here, remember this is the draw. That was my interest. My private mentorship students know beforehand that this is what I was looking for. As soon as I asked on Twitter, do you need a dose? Okay, and that's like me asking, do you want to see me do a vignette? Vignette is where I actually do an execution, record it from beginning to end, and I put some kind of song at the time that I was either listening to or came to mind, and I put it on there, and it's kind of like, you know, it's my meditation, and some of you like it as an artwork, but I like doing it. But as soon as I said, you want to see a dose, I had several students say, I know you traded the relative equal highs. So that tells you they've been around the block with me for a while, so they know. So if we can see in that blue shaded box, notice what happens here. Price drops down from in here. They leave relative equal highs. So what are they doing? They're engineering liquidity. Why is that useful? Because they're going to come down to clean up these smooth lows. Now, I don't have the time when I turn the chart on, because I went to Telegram and told my group, I said, listen, watch the 20,287 level, buy side, NQ. And no, you cannot get in my Telegram channel. It's just for private mentorship students. I am not doing a mentorship again ever in the future. You cannot buy your way into the group. I am not giving them signals. I'm not doing anything that would make you want to get into it. It's just us hanging around individuals that are all like-minded, and I feel comfortable talking to them. I still have leakers in there. That's why I don't teach them anything extremely advanced. I come out in the public and then I ask them, do they have questions? I predominantly will use their questions in my delivery on the things that I'm talking about today and when I'm doing live streams. Sometimes I'll use somebody's comment in the YouTube comment section, sometimes, but they're only going to be the ones that are followers of the channel. If you're not following me on the channel, I'm not really paying much attention to your comment. So once I posted that I was interested in 20,287 buy side NQ, I was waiting for the market to give me something to run on. So that means I have to wait for the manipulation. And this was it. They create these relative equal highs and they drive it down aggressively. This area here, can you agree that that is absolutely too perfect? Like, this is a classic example that would be in every support and resistance book. John Murphy would have this in his book, Technical Analysis of Financial Markets. which is the Bible for retail trading. Every single one of you listening to my voice, you better have electronic PDF format or a hard copy of John Murphy's Technical Analysis of the Financial Markets. That book is the Bible for retail traders. And I am absolutely on the hunt for everything that's in that book. I want to be diametrically opposed to it. And when my concepts are arm wrestling anything in that book, my stuff's beating the living hell out of it, literally handing its ass to it. So to understand how a retail trader thinks, that book will help you. I am not telling you to read that book to subscribe to any of those views. Zero affinity for anything in there. Nothing in that book, zero, is useful except for knowing what it looks like through a retail perspective's mindset. So they will see when the market does this and it runs out. As soon as it trades above this high, what are they going to do? They're going to chase it. They're going to be a breakout trader. Okay. So how that would work is when the market was ticking like this and creates this little high, and as soon as this candle does that and closes, they're immediately going to put a buy stop order right there to buy on a breakout. When I'm reading price, I'm looking for areas where they have done that already. So here, their long entered. I'm sorry, their long has been entered on here if they use the buy stop. So in this little area here, which just happens to be also yesterday's what? New day opening gap, which is for today's date. That's why it's dated here. Okay. The folks that are doing their trading view indicator, you have to use the date that's after the 6 p.m. Eastern time. Whatever that date is, 6 p.m. Eastern time, that creates the new day opening gap. You have to roll your date forward one day, and then you've answered the things that I would say that is now correct. So I can't co-sign anybody because they're not doing that yet. But because if you don't have them annotated, you're going to get lost in the sauce, and you can't do that. You have to know what your levels are. So retail would be long here, and they're feeling good about this because sometimes retail traders are in profitable positions. They don't necessarily believe, what I believe, but they believe that their indicators, their strategy of breaking out, buying momentum, selling momentum, that's the secret recipe, and it's not. You're just catching a little tailwind, but if you hold on to it too long, it'll turn back around on you. And what do? They see this, and it runs up, and they're hoping it's going to break out again here. They deny them. And anyone that bought on a breakout here, they're going to have their stop loss right there. So I have two reference points that I'm watching after I told my private mentorship group, 20,287. I want to see how it trades here. And if it's going to go below here, what can it reasonably go to? Well, this clear, obvious actual gap. This is a common gap. Okay. So this common gap is in close proximity to what? The original onset or the inception of the move, which is based on what? 1, 2 equal lows. So retail sees this as what? Support. So if anyone that went long on a buy and a breakout here, initially their stop loss is going to be below here because they see this as protection. It's being defended in their eyes. Anyone that would have trailed their stop loss would be right below this wick. So I have to watch and see, how does price behave? Does it go down to this level here? And if it goes below here, does it careen through that and dive into this? Because if it goes into here like that, then I know all I have to do is wait for price to book underneath these lows. So when it does this drop down in here, it's not only just going below the lows, but it's going into the upper quadrant of those dual volume imbalances on the daily chart. Remember I put the Fibonacci on it? Let me scrunch up the chart and you'll see it. The low of it, lower quadrant, midpoint, upper quadrant, and the high. Remember, it's the two volume imbalances that I'm encapsulating on a daily chart. Listen to yesterday's live stream when I'm talking about the daily chart. I tell you that is how you look at it. Today, I'm teaching you how to refine that and get the algorithmic perspective of where the market's going to go based on those two individual volume imbalances and frame them logically. You're not going to find that in anything else. It's not anywhere else. Okay. But look what the price is doing. Not only is it just going below the lows, but it's going right to the upper quadrant of that level. So I'm anticipating, listen, I'm fucking predicting. I'm not reacting. I'm predicting the future. I'm predicting where my PD arrays are going to form. Now watch, folks. Anybody that's watching with supply and demand bullshit in their mind, watch. Really pay attention to this because I'm about to smash that shit on the rocks. A demand zone means that there's some kind of buying that's taking place, some kind of propulsion higher that sent price higher, so they're going to react off of that when it gets back down into it. Well, that just goes right out the fucking window because now we're below these lows. So where's the demand zone here? We're below all these lows. We traded down here. See that? On the 1 minute chart, I highlight the volume imbalance right here as the down close candle closes but doesn't take out that wick. Listen, because this is not supply and demand. Sam Seiden, take good notes, buddy. Take some good fucking notes. That volume imbalance is the first thing I draw out. I know that once we get above, as soon as this candlestick closes, it opens here. My eye sees that volume imbalance as this candlestick's closing like this. In my mind, I'm thinking, I want to see that candlestick close just like you're seeing it close there. And leave that volume imbalance right there. That shaded, that little box, that little drawn out rectangle. I want to see that stay just like that. Because when it does this, I know that when this candlestick or the next candle after it would go up, it's going to come right back down into that level right there. Why? Why do I believe that that's going to happen? And why is it going to act as a discount array? Why should it be bullish? Well, the liquidity over here has been purged. We traded down to an algorithmic price point where if I'm going to be accurate about anticipating, predicting how a PD array is going to form, when and how they're going to form, it needs to go to a level that I anticipate having a reaction at. See, I don't trust in diagonal support and resistance, which is like diagonal support trend lines, diagonal resistance trend lines. I don't look at the market like that. I don't look at classic support and resistance. I'm looking at liquidity. I'm looking at levels that you're not necessarily seeing in your chart. This level here, this quadrant level, none of you are going to see that. You're not going to see that. No other school of thought is going to show you this level here. It's not going to happen. That's not happening. Okay. So I have tools, I have resources in my repertoire that afford me a visibility over price that none of you have. And I'm showing this to you so that way you can appreciate, number one, that it's not just simply a down close candle that makes an order block. And it's not a demand zone, because a demand zone would have some kind of an anchor over here, and it's not. We're below the lows. That is not in supply and demand. And it doesn't just do a drop down into some random level. It's going to a level that I've outlined in a PD array that you saw in the live stream yesterday. Guys, stop with the shit in Telegram. You should be watching the live stream, not commenting. Now everybody's going to say, can I join your mentorship? No, and don't fucking send me emails. You can't join it. I'm not doing another one in the future. I'm teaching mentorship right now. In case you haven't noticed, I'm doing it right now. It's fucking free. Why do you want to send me money? Stop. I'm teaching for free. It's just relax and take notes, okay? So this down closed candle here has a volume imbalance over top of it. The indigo entry model is a run on stops order block with a volume imbalance on top of it. Okay, that's the indigo entry model. That's all I'm going to say here. There's going to be more things to it, but you already know what's going to happen. It's going to be on Instagram. It's going to be on Telegram. It's going to be in Discord channels. It's going to be on YouTube videos. And there's going to be some kind of a booklet put on Amazon before we get to next weekend. Okay. ICT's indigo model entry, stop that shit. Okay. Because nobody's buying it. It's not going to be taught in entirety until it gets in the print. But I'm showing you things that haven't been taught before. But it's leaning on logic that I've already introduced, which is what? There has to be one of two things happening for your entry. It's going to go to liquidity, which we clearly see, and I think anybody with the common sense can see that would be sell stops below these relative equal lows, right? I mean, it goes without saying. But if it's not going to liquidity to create the long entry, it's going to go down to a discount inefficiency, which is what? Here, that's an actual common gap. So in your chart, it could be drawn out like this. That would be a reasonable expectation, assuming that these relative equal lows were not there. Now, your question is going to be, well, how do you know not to buy in here? And how do you know they weren't going to just leave those relative equal lows there? Because sometimes you do trades and you short underneath relative equal highs and the trade pans out. Or you'll go long in situations like this where there'll be relative equal lows and you'll get into a gap and you won't be fearful of getting stopped down here, because I'm teaching that breakdown to you right here. Okay. Because we drop down like this and this swing low is sitting inside of that new day opening gap, that's already enough as a draw. There's several factors there for the price to at least want to get there. But if it's going to go there for the purpose of going below it for trailed stop loss orders, for anyone that's going long on a breakout here like retail traders would, to get below that, well, what's the first level? It would be the low of the new day opening gap, which is too insignificant for me. So what's below that? This common gap. Now, if this low would have went lower, then I'd be going long there. And it wouldn't be the indigo entry model, or most likely probably wouldn't have done it. The indigo entry is simply an order block inside of liquidity with a volume imbalance on top of it. Okay, so it's a culmination of several factors, but the main thing is it's going to liquidity. And I wouldn't have used this inefficiency here because these are too smooth. So if it's going to go below this low here, it's going to go into this gap, which watching it did. Then I simply have to sit and wait for it to get down into this liquidity. Once it did it, I want to see it touch that upper quadrant on those dual volume imbalances on the daily chart, which I told you about yesterday. Now imagine if I wouldn't have told you that yesterday. This would have looked like some mumbo jumbo bullshit, right? It would have been like some contrived, made up nonsense, right? And that's what some of these individuals that think that what I'm teaching has no validity because it hasn't been in any of their books. They don't have a hero to look up to. I'm an anti-guru. I'm an anti-hero. Okay, so I'm going to be divisive. But I'm teaching you the very things I'm doing that arrive at these stellar entries. And they're not linked to anything else. They're mine. They're all mine. And I'm lending them to you. Okay? You don't own them. So, no, I wouldn't buy in here. I want to see this trade to it and through it. Remember, every PD array isn't intended to stop price in its tracks. It's not designed to do that. It's to give you intel about what to see in price action. If it trades below this low, I want to see it trade into this gap here and go right through it like a knife through butter, hot knife right through butter. And it does so. So it means I know I'm going to be waiting for it to trade below these lows. And then where and how far below the equal lows am I going to reach for? The upper quadrant level. And then if I get an order block, the down close candle, in this case, we had the volume imbalance on top of the order block. So I'm highlighting that in the video. You watch me do this. And then on the 30-second chart over here, which I'm not going to be able to do that here because you have to watch the video again. If you want to see me post the long version of that video of me executing on the YouTube channel, it's a little bit long. I just know that when I post them like that, even when people speed it up to 2 times the regular playback speed, I know they're not going to watch the entire run. And that's why I don't like doing it. because it's a waste of my time waiting for it to compress and then upload it. So that's why I also do it in short form version. I speed it up and I put song on it so it kind of holds your attention, because everybody has TikTok mentality. So I trick the viewers into thinking they're watching a 30-second TikTok, but because the music's playing, whether you like the genre or not, you're either bitching about the music choice I've made, or you're sitting there cussing at it saying, oh, you've lost 15 times. This is the one you got right. So I have to hold your attention on a video that's not monetized. So where's the logic behind that, right? So as price creates the volume imbalance and this candle trades up above it, I know that I'm going to see it trade back down into this area. Why? Why would I expect that? Because if you look real close, this is worth paid mentorship price, and you're getting it for free. Isn't that awesome? This separation between this candlestick's body and this candlestick's body, that's the shaded area I'm highlighting. This candlestick delivery does what? It drops and lays down a body. How? With buy side delivery. See that? So when it does this, once the volume imbalance is created, and we're down here opening on this candle down here, it trades up. So what is it doing? It's laying down a buy side delivery body. So now what does it need now? What does it need? Read delivery down into this area. Watch the executions. As it's doing that, I'm going long. And as it touches in the top of the volume imbalance here, I'm going long again. I'm adding. And then this gap, I'm watching, do the bodies fill in and respect that area as well? So watch over here. Look. It's missing buy side and sell side. The wicks, I ignore them because they do the damage. There's no body on this candle here. It's the open and close, the same thing. So I'm ignoring that entirely. My focus is primarily on the volume imbalance between these two. See that? So there are times when using the rules I'm giving you, and they'll be black and white, true, easy to follow logic. It's not always just this. There's other things you have to look for. But a volume imbalance is not simply just using two consecutive candles. You have to look at the same way I did the daily chart. Think about it. Is it any difference here? No, because the body of this candle is the open and the close. So what is it? There is no body. The low of the candle and the high of the candle here, and then the open and close is the same price. So if we use the open or the close and refer to it as the body of that candle, is it still same thing you're seeing when I talked about yesterday, where you have a volume imbalance between this candlestick's close and the open of this candle? That's a volume imbalance. It would look like this. Technical science. See that? Volume imbalance. And then the other one would be this. Yeah, how about that? That's a volume imbalance. But I'm teaching you to don't even look at it like that. This is how you look at it for real. Okay, so the algorithm is ignoring this candlestick entirely and focusing on this. That's the reference point. That's the array it refers back to. And you can see the bodies. I'm sorry, the price action in here. We wick outside of it, yes. But look what this does. Hammers it here, comes back up, rallies away. So what is it doing? We have an absence of buy side and sell side delivery on the body's perspective. We have wicks in here, but we have an actual gap between this candlestick's low and this candlestick's high. So there's a real separation or a real common gap. That's not my term. That's just what it is generically. When there's no trading in there. That is a real liquidity void by definition. This is a liquidity void. Okay? This drop down is not a liquidity void. This is a liquidity void because there's no printed mark-to-market orders executed between this candlestick's high and this candlestick's low. So that makes this a real liquidity void or common gap. Okay. Well, if you look what happens over here, we have sell side delivery through that, and then we have buy side delivery through that. See that? Big, huge paradigm shift. Ready? Watch this. It's missing both buy side and sell side delivery between these two candlesticks points, high and low, respectively. Sell side delivery, think about that paint roller analogy. You have paint on your roller and you're applying it to the wall and you draw the roller down. So you have really good supply of paint in that little white shaded area. Now you're going to start rolling the paint roller back up. And you see that happen on this candle. You see that? So between this candle portion here on the down close and this candlestick right here on the up close, price has been offered both directions. It's offered sell side delivery and buy side delivery. This little area now has become balanced. But what can still happen with the wicks? They can do the damage. So you have to refer back to that volume imbalance in its true form, which is here. See that? Now, I already know there's about 90% of you saying, fuck this shit. This is too complicated. I didn't get the algebra. I quit school. I didn't even graduate. This is bullshit. I ain't trying to learn this, man. Fuck this guy. I understand. I'm not teaching precision to everyone. It's only for the strong. You want to take trades like I showed last night, what I showed here? Look at them. Look at those executions. You see any market replay up here? Okay. That was done with live data. Live, not Memorex. So some of you are like, what the fuck's a Memorex? The delivery in between these two price points here. You want world-class trading? You want world-class executions? You can learn it from me, but it requires this. If you don't want to put this kind of level of work ethic behind it and try to study, you're never going to get it. You don't need this to be profitable. Don't mistake what I'm showing you here. You can make very simple bread and butter income and never, ever, ever go into this degree of technical science, and it gets further deep in the rabbit hole than this stuff. Like, this is still nothing. But if you want to go to the degree of world-class execution and seeing setups that the average bear in the industry isn't going to recognize or even anticipate, they wouldn't even know how to react to this type of trade. Like, they wouldn't even know how to do it. And I'm nailing it down. I'm nailing it down. You have to study what I'm teaching you. So the sell side delivery here in this small little white box, okay, what I'm talking about specifically is, see the top of the white box here? Look at where the black down close candle touches that upper portion of that white area to the lower area. That segment of the black candle coupled with this up close candle here. This portion of the white area, when it touches it and trades up to the high end of it right there, at that moment, this little area has become, what did I say? Has become balanced. But what can happen still? The wicks can do the damage. That means it can color outside of that white box. But look closely. Even though that we go back to that reference points of the actual volume imbalance here, my eye is watching all these things. I don't need to draw the lines. My eye is keying up on what I just showed you relative to this candlestick here and this candlestick here, which tells me that when this candlestick here opens and it trades down, I know that this is just a wick. It's not going to close down like that. It's going to open here, trade down, and come right back up, and then it closed high. Where's the body stopping at? It's inside of this little separation over here. It's on the high end of it. And then the next candle here, we open, we trade down, and stops dead in its tracks right to the tick over here. What's this candlestick's closing price? You're going to look up at this upper value here, okay? 20,000 to 29.50, so 29.50, okay? What's the low of this candlestick here? You're going to look right here. Look at that value. What's that candlestick's low? 29.50. To the fucking tick! To the tick! You awake now? Now you're sorry I got that audio fixed, aren't you? Oh shit, it's fucking delicious. So when we see it trade down like that, what is it doing? It's doing the damage outside of this area that's been rebalanced with this candlestick here. But now let's go back in and see what it's done. Once you understand what you're looking for, you don't have to have the annotations on your chart. Your eye will just go to these things. But see how the body stops and rests on top of that white box? And the body stays above that white box? It only does the damage to the downside, stopping out anyone that wants to trail a stop loss up if they're absolutely long. And think about it. Think. Watch the recording. As the market's dropping down with that wick, I'm buying it. Think. I'm not worried about that thing careening down here lower, taking out what you might think is relative equal lows. I'm looking at how it took the liquidity out over here inside of a macro. What? What? What'd you say there? What time is this drop? When's it occurring? We're up here at 8:10. So we're in the last portion of that 750 to 8:10 macro. So where's the liquidity? Well, what has just happened? We left these relative equal lows here. So on this candle, we start doing what? Spooling. Remember that I give you a time window. That means it's going to start. It doesn't mean your trade goes to target there. It just means that it starts to spool. Spool for what, ICT? What does that mean? It means price is going to run in a direction to a inefficiency above or below, and or to a pool of liquidity above or below market price. So what has happened at that point? Look to your left. Retail bought a breakout. Retail trusts these relative equal lows. They think that's support. So the macro is going to go down and cannibalize them. Stop. Draws right to my level, upper quadrant, dual volume imbalances on the daily chart. Dual volume imbalances on a 1 minute chart. Same logic, same things going on here, okay? But when it trades down and creates this down close candle, I want to be trading inside of this open to its high of the wick. This little area in here, that is my order block. That's my prized entries. I want to have my entries thrown in anywhere inside of this. This is the watering hole. And I'm the cheetah. And I'm running down my dinner. I know that the market's going to offer time and price inside that little white area. So when price is in that area, I'm trying to capitalize by going long in it. And then I'm using this balanced price range here that was a former common gap. I'm seeing the signatures that this is exactly what it should do here. So anything on the downside, I wanted to add one more when it was trading down in here, but I had enough. I was like, okay, it's good enough. And then I set everything in motion. I added the annotations for the minor buy side liquidity pools, and then rally. Look at the delivery here. Look at that. Look at this candlestick over here. What's this candlestick's low? You're going to look at this value right here at the top of the chart. Look at this candle's low. 20,231.50. So 231 and a half. What's this candlestick's low here? 20,231 and a half. Folks, listen. Sam Seiden would fucking love it if he could have fucking had something that told you that. Elliott Wave wished the fuck he could fucking talk to you like this language. He wished he could have. He's still on the fucking beach. He's waiting for the right wave. I'm riding every fucking wave. Every fucking wave. Buying and selling, up, down, up, down. I can do it all day long. But it's based on things that are not in your bullshit books. It's something that's going on behind the scenes. Okay? You never, ever, ever see anybody. Yeah, ICT's talking about a gap. There's always been gaps. He's acting like he invented a gap. No. I didn't invent that gap. I codified the concept of trading that gap even after it's been filled in to a precision level degree that nobody's ever touched on. So yeah, I'm the daddy. So we rally up, and what do we go back into? New day opening gap for today, October 1st. Where's the body start? Right at the low of the new day opening gap, and then it trades up, closes above it, and then we open here, and where's the low go? Down to the low of the new day opening gap. See it? Look at that. That's perfect, folks. And you're sitting here looking for harmonic fucking patterns. You're looking for indicators. Open, high, low, and close, and the time of the day. That's your indicators. That's all you need. You don't need anything. Now, I dress up my chart to show you these things because I have to be able to draw your attention to what frame of reference I'm using. I don't have all this stuff on my charts because, number one, it takes time to draw all this bullshit out because I'm using a 15-second chart. Think about how many things you can do inside of 15 seconds. I'm reading the price action. I'm matching what I know algorithmically to what I've taught you as a language. And I'm waiting for the language talking point, which is the PD array, to appear in the chart so that way I can draw your attention to it. But I already know where the PD arrays are going to form. Like I already know where they're going to be. That's the part that you don't understand. That's the part that I am going to allow you to understand that is me being absolutely fucking arrogant because I know something you're never going to learn. The closest thing I can take you to is what I've taught you in this language. My PD arrays are going to get you as close as I possibly can without divulging what I'm not willing to teach you. And for some of you, that is a big sticking point, and you want to say, I can't be mentored by you because you're not being honest. You're not being upfront with me. You're hiding things from me. I'm not hiding everything. I'm hiding what I have to hide, but I'm teaching you everything you need and more. Like you don't need to know this entry model. Like you don't need to know these things here. You don't need to know that. Just a simply optimal trend entry was sufficient enough. The silver bullet was sufficient enough. The model 2022 was sufficient enough. So, and now Caleb has a model. First presented fair value gap between 9:30 and 10 o'clock, then using it with a bias for one trade in the session in the morning. Like, I can do this every single day the rest of my life, and it'll be a unique model and never overlap. It'll never, ever overlap. There's never any overlapping. There's 3 constants to every one of my models, though. You ready? Time. Why should price move? Why did price move? Those are the 2 questions as it relates to time. It's going up for inefficiency or buy side, or it's going down for inefficiency or sell side. That's it. Those are the 3 primary core content principles of every single price action model that I have, or every execution, or every idea about getting into a trade. Those 3 primary pillars, they're always in every single one of them. But not every single one of those models are going to operate and execute on the same basis. Let me ask you this. What would it be like for you to say, wow, I like these common gaps here like this. And I like that because it makes sense. I can see it. It's not ambiguous at all. It's a real, actual gap. And if I'm bullish, I can wait for confirmation when the market trades above it. I'm going to try to just go in there and get an entry there, and then I'll use a stop loss based on the lowest low. And that would be my model. Entering in this area here, once we trade above it, this next candle, we trade into it. So you'd be filled there, and your stop loss would be below the low. Okay, it's only, 13 handles? That's not big. That's not a large stop. But what would prevent you from using that as your model? Nothing, except for you deciding that's what your model is. Is it a bad model? Absolutely fucking not. It's a wonderful model. It's a wonderful entry mechanism. Entry mechanism, stellar. But it's not sexy. It doesn't have a cool name around it. I don't have a video where I'm playing music around it and I'm showing a $20,000 win off of using it. But it had its place in what I did last night. It had its place in it. And my focal points is what I'm showing you here. You all want to see these books in your hands and you want to learn from them. I'm giving you more detail than I'm going to be able to put in those books. The books are just going to be this. But if you don't know the things I'm teaching on this YouTube channel, that book that you first acquire, it's not going to feel like it's taught you much. It's going to feel like something's missing. Yeah, the missing part is you haven't gone through my lectures here. It's gonna take you right back to this YouTube channel. So why are you rushing me to get those books? They're pissing me off about the covers. I want my cover the way I want it, and they're trying to argue with me about what they want to sell it for, what they want to make on it, and the cost. It's going to be my way, or I'm going to go to a different publisher. It's simple. So, and that's another reason why I keep saying publicly that don't buy my books, because I want them to see. I don't give a fuck about making money off of books. That's not why I'm doing it. And push comes to shove, I'll self-publish it. I don't give a fuck. But the point is this: when we're looking for trades, one of two things have to happen at the time of day that it should. So excluding time, because that's the first factor, obviously, is price going to an inefficiency? Well, this one here was to see if it wants to go through it first. And it went through it. That means that I can wait now comfortably that we're going to get below these relative equal lows. Right here. How far below it? Upper quadrant of the dual volume imbalance on the daily chart that I taught you yesterday. Wait for the down close candle to form, laying over top of the upper quadrant. That is the qualifier. That's the thing that I trusted about it. How do you know that it wasn't going to keep going lower? It could have. It could have went lower and it could have stopped me out. No problem. Then I would have waited for something up here to get long one. I knew by them dropping it here like this, that was them just upsetting the smooth area over here, because retail sees that and trusts it as support. And that means they have orders underneath there. And the orders that were underneath there, I waited for them to get engaged. And then this candlestick right here, soon as we crossed this candlestick's open, that movement right there, I don't need it to close there either. As soon as it did that, that validates this as a bullish order block. Okay, I don't need it to trade above the candlestick to be an engulfing candle. That's what makes a order block. It's ICT bullshit. You guys don't know what the fuck you're talking about. An order block is validated when you have other factors around the idea that the market should turn. I already anticipate the market turning. I'm already anticipating and predicting where my order block is going to form. I can predict where the fair value gaps are forming. I've done it in live streams. I've done it in executions. I've done this before in front of you. You're not going to find someone else out there telling you where my PD arrays are going to form. That's why you got to stop listening to these people. If you want to watch them because they're showing you how they use the information, I have no problem with that. I have no problem with that. But if they're out there trying to actively teach you my stuff and they're selling you mentorship, here I'm going to teach you smart money concepts or ICT concepts, they're fucking lying out their ass. Okay, they're just winging it. They're doing the best they can, but they're not really teaching. They're demonstrating their current understanding, but they're not correct because they don't have everything that goes along with it. And when they're losing, it's because they don't know everything around it. And I'm not saying I'm 100%, but if I run Enigma, I'm not losing. That's what I'm trying to explain to you without saying it, but I'm going to both places tell you. If I run Enigma, not yin and yang bullshit, okay? When I run Enigma, it's fucking flawless. It's up, down all day long. All day long. I cannot use that. I cannot use that. There's no way that I can just go out there and just run rampant with that, because I will have visitors. Okay, I'm not going to have that. I'm not going to have it. So what I do is I take you as close as I can, and I taught you a language that gives you some of the information that it allows me. Some of it. You only need one thing, one setup a week, and you don't need your job anymore. And most of you don't even realize that. I'm going to hopefully guide my son, Caleb, right out of his working class hero job. It may take till spring, but that's what we're watching. Okay, we're watching this laboratory experiment. I tried it with Cameron. He wasn't able to do it because he's too immature. He's too video game minded. Caleb, admittedly, is a little bit harder to teach because his focus is easily distracted and he has attention deficit, and you see how it is when talking. It's hard for most people to follow me because they're just not equipped to listen to this stuff. And I can go off on tangents for a little bit and come right back to it. And it's annoying. But that's just who I am. And I'm not going to, and I can't change. So if it's a bothersome thing for you, eat it. Okay? Because there's nothing else I can do. but this. But once we have the entries in here, then I simply allow the profit phase to unfold. That means the portion where the price starts to run in your favor. And you just simply let it go. And it trades to the top of the dual volume imbalances on the daily chart, which is this area here. And then what does it create? A volume imbalance. This can act as a breakaway gap. Okay, so whenever you look for a level that's going to be a threshold for determining the strength, okay, or the magnitude of the price run that you're a part of, you don't want to see it do something like where it just trades to the top of that blue line there and then come back down. You don't want to see that. You want to see it leave and either create a buy sign imbalance, sell sign inefficiency, which is like the reverse of this big down close candle. You want to see something like that to the upside. And then when I see those types of things where it's breaking out of a higher time frame PD array, I like to see imbalances created there, and then I like to see them stay open. Don't take my word for it. Look at every single one of my examples. You'll see that's actually happening all the time. I'll write down optimal if it remains unfilled. I'd like to see this stay unfilled. Optimal if doesn't come back and trade to here. Something to that effect. I'm always drawing your attention to what you later find out is a breakaway gap. Okay. Or if it's in the middle of the move, it could be a breakaway gap by definition, but it's half of the move. So that means it's a measuring gap. So that means that I have another price leg equal to whatever the first portion was. Okay. So what would that mean? What would that look like? We're going to say that if you're using this logic here with that volume imbalance being equivalent to a measuring gap, you could do something like this. You can go, this is the beginning of the move. Draw your fib up to, watch the, I got to drop this for a second. Watch the 50% level here. Keep your eye right on here on this number here, okay? I'm putting that right at the bottom of the gap. I'm sorry, the volume imbalance, right there. You see what I did there? That's the volume imbalance. That's above the dual volume imbalance on the daily chart. 50% levels there, okay? So that means up here, this would be the first leg, and the second leg is this up to here. And you could wait for a run to that level there. If this was a measuring gap, which it's not. It just means this is a breakaway gap, which means it's a whole lot more move coming. So I just taught you the distinction between a breakaway gap and then a measuring gap. But whenever you're leaving a higher time frame PD array, when you're bullish or bearish, I always invite the opportunity to see a buy side imbalance, sell side inefficiency when it's moving higher, or a sell side imbalance, buy side inefficiency when it's moving lower. And then I like to see those things stay open. Why? Because if you see the market rally like this up out of here, to cancel any idea that anyone can say that I'm trading off of support and resistance, classic SNR, they would expect it to come back down to that level and treat it as what? Resistance, broken, turn, support. The best moves are going to be seen where classics and support and resistance are being denied. They're not giving them a seat. Think about what I'm teaching you. I'm teaching you how to cannibalize less informed street money. Why would the market makers, why would the algo, why would the street money ever get a free ride with VIP seating? Why would they ever be given that when it's they themselves that are being cannibalized? Like the lion doesn't stand over top of its prey and say, hey, listen, do you want me to comb through your hair and get the ticks out before I eat you? It doesn't do that. Just like it doesn't look down and apologize before it eats. It just eats. So it's not going to set a table for its prey. It is dinner. So I look for these signatures where retail would expect, hey, okay, maybe if it goes down here, I can get in. Wrong. Elvis has left the building. Goodbye. See you later. Zoom, zoom, baby. So the first relative equal highs here, that's buy side. You can see at the actual high candles. Notice that. See how it does that? It's just beautiful, isn't it? It's almost like I know what I'm doing. The rally above the second buy side imbalance, I'm sorry, the buy side liquidity pool was this one here, the minor. This was all in the recording last night. And then just placing it right at that level here or just before it, you can see there's the exit. There's a little caret popping up right down here. See that? And then ultimately, we have the 287 level, that buy side, and you can see that being hammered right there. See that? No market replay. Okay. So when you see trades like that, I could have used the trailing behind the candlesticks when we rallied above here by having the stop loss on the balance of 8 contracts. I could have trailed it here and let it rally up. And every time it created a short, let me take the execution off real quick. I'll explain this, and then we'll get into the drills today. As the market traded above here, placing the stop loss of 8 contracts there, and as it made a higher high here, right on this is called running down equity. Okay, every single time it creates a higher high. That was not what I wanted to do. There you go. Every time it made a higher high, like it did here, I could take one of the 8 contracts off, wait for a swing high to form, and then when it trades above this swing high, take another contract off. And this high here, if it takes out that, take another contract off. And this high here, when it breaks above that, take another contract off here. The whole time trailing up the remaining balance. So that way you're strangling and choking like a noose around the neck of this trade. You're getting every ounce of blood from it, squeezing it. And then finally, it would eventually stop you out on whatever remaining portion you had, because there's not enough swing highs here to get 8 contracts off by doing singles. And then ultimately it just rolls down. You would have stopped out. But I was tired. I want to get to bed last night. And then when I laid in bed, I kept going on Twitter and kept going on my private mentorship groups. So, but ultimately, you can see it end up becoming a market maker sell model, which is shown here. See that? Original consolidation, smart money reversal, low risk sell inside this inefficiency here. First stage distribution, second stage redistribution. And where does it trade down to? Where's it trade to? Another level that's on my notepad, but you can see now visually. It's the high of yesterday, Monday, September 30th, 2024's first presented fair value gap high. Holy shit, you're telling me that these inefficiencies work past the day they were formed? Yeah, there's this guy, calls himself ICT. I don't fucking understand why he calls himself that. But he said that these gaps can last for several days. Can you imagine that? Can you imagine the shock and awe, the disruption in the industry if people started paying attention to that? Oh, shit, that guy ICT. Anyway, we're going to take these lines off here because we don't need them. That's a distraction, and this is a distraction, and this is a distraction. This is a distraction, and we don't need the sell side line anymore. But wait a minute, what was that? Yeah, I need that. Take this off, and then no, wait a minute, I don't need that. These are the quadrant levels. I don't need that at all. All right, so that's the business. Okay, so hopefully that explained the trade. That also explained indigo entry is simply just a purge of liquidity. It's bullish or bearish. And the order block that trades into the liquidity, it has a volume imbalance on the top of it or below it, respective to it being bullish or bearish. Okay, and that's all it is. So now we're going to go to the part where I have to remind you that this is not a signal service. It is not for you to copy with a real account. You are going to lose today. If you do everything I'm going to do in front of you, everything I'm telling you that I'm going to execute on, okay? I am not promising you a positive outcome. I'm not trying to trick you into a losing trade. I'm not trying to get into a winning trade and say, oh, I lost because I meant to do that. I'm literally teaching how my son is to overcome his fear about executing with a limit order. Because right now he's plunking down just market orders. Right now, he's working with a Top Step account. He's got, I think he said $1,200. I don't know how they work, to be honest with you. But he said he's got $1,200 or so, and then he gets what they call funded. So I guess I don't know what that really means. I just know that Cameron's done it before. He got a payout, and Caleb has the lowest account, whatever account size that was. That's what he has. He only has one of them, and he's trying to get funded by tomorrow. That is his goal. I told him, I said, what happens if you do it by Friday, or what if you do it by next week? What's the hold up? Like, what's the big deal? He's just trying to do it. So we'll see. Okay, but he's had consecutive winning days, and there it is. So once he gets it accomplished, I'll have him send me the proof of it, and then I'll tweet it, and that way you can see it. And then he'll have, I guess, a funded account, and then his goal is he's to make his weekly salary for 4 weeks. But when he makes it, he has to stop trading. Now imagine that, right? Like, he's going to be in a position where he could potentially take money out of whatever this account is. And he knows that he can do more. And he knows that I'm watching him and I'm holding him to the fire that he has to do this. So the first rule of Fight Club is you have to don't talk about Fight Club. Obviously, that's the first rule. Okay. So in trading, you don't go to work and tell everybody that you're going to quit your job. You don't tell Carl what you're going to do. You don't tell Carl that you're trading. You don't tell Carl you just got a funded account. You don't tell Carl you just put money in a real account. You keep everybody in the blind. Don't talk about it. Okay. And I'm teaching him to trust that with one contract, not 5, not 20, not 15, not 30, whatever it is they offer, one. Never, ever, 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 ever more than one contract. I don't give a fuck what size contract you got funded with. Trade with one contract. One. Because if you can't quit your job with that one contract, doing more than one contract is the only thing it's going to do. Is going to guarantee that you're going to blow it. You're going to have more fear about the outcome of that trade because you're trading with leverage that you really can't afford to be using. So one contract retires you. One contract removes you from your job. Your long commutes, Caleb, one contract does that. So when you feel the impulse to go into 2 contracts or 3 contracts, or if you do finally get a losing trade, don't think you got to correct it by doing 2 contracts. Just go home with the loss. It's not a problem. It's not a big deal. It's easy to fix that. But you don't want to start all over again and go through the process of what you've already accomplished already. Okay? You're doing it right. Just be patient. So I'm going to type this out, okay, and it's going to be a reminder to you all, okay? This is called volatility pinball, meaning that what I'm going to be doing is I'm going to be buying and selling with a limit order and using limit orders to exit. And we're going to teach Caleb, and you're all going to learn how to do it as well, how to practice with a demo account and desensitize yourself to price action. Also, reading order flow, running against liquidity, trading inefficiencies. Okay. You want to learn how to pick the right fair value gap. You want to learn how to pick the right order block. You want to learn the right draw on liquidity. This is how you do it. My books are not going to help you. My videos aren't going to help you. Paying somebody else to talk about my stuff, parroting it, and sometimes saying it, many times saying it wrong, they're not going to help you. Watching streamlined 5-minute trainers of my content is not going to help you. All of that stuff is useless until you get into the chart and do what I'm about to show you today. You got to press the button. You have to have something engaging your attention so that way you can see it. You have to feel it. Now, I want you to think about something. I got 1.4 million followers on YouTube. I have actually more than that because the majority of the comment section are left by people that don't follow the channel. So there's a lot more people following me and watching my stuff than you see. They download the videos. That's why the views aren't as high as they are. They don't watch them. They download them because they're afraid that I'm going to delete the channels or somebody's going to come in and say, let's get this guy's shit off the internet. It's making people really, rich. So, I mean, you're welcome to download them. I don't care. I mean, I'm putting out there for public consumption anyway. But the idea is this, okay? When we're looking at price action, I'm going to magnify this, and we're going to trade inside of every current dealing range. Now, this is going to chop up your account if you try to do this with real money, or if you're trying to trade this with me with a funded account. You're going to get beat the fuck up. Okay, it's not about the making money, and it's not about losing a little bit. It's about entering. It's about using specific price points to enter and practicing, and then seeing what it feels like when you get into them. And over time, what will happen is you're going to see a graduated improvement in what you're seeing in the chart and what you're keying up on as an entry. Okay, you'll see what I mean when we go through. The first couple of them, I'm just going to wing it. I'm just going to toss it in there and say, okay, I want to see it go to this liquidity or this high or low, okay, or this inefficiency above or below. But let me get this chart set up and type out my disclaimer first, because otherwise Yahoos are going to take this and have a field day with it. But hopefully, I'm not sure how many people are actually watching right now live, but hopefully you guys can appreciate what I'm doing here, and what I'm explaining is not for you to think as this is me taking trades to make money. That's not what this is. Real quick. Let me show you this. This is what I do every single session. Okay. For disclosure and for compliance reasons, I am not a financial advisor. Okay. In the United States, I do not hold a certified trade advisor license. I'm not legally in a position to tell you how to invest your money. That's why we're talking over top of a paper trading account. You see that? Now watch what happens. When I click on this, okay, you can see that the balance is $112,200. Okay, that's the profit from last night's Asian session trade. You see the date on that right there? What I do is I'll log that. I'll put the date in. I'll give any kind of reference point that's going to be a major driver for the day. And because I know that if I click on this little area over here and I click on chat, you're going to see TradingView talking to me. TradingView's asked me to have a partnership and affiliate program with them. Okay. I have respectfully declined. I have these already recorded and screenshot in case they delete it, so that way it never, looks like I'm telling you something that's not true, or I don't want any kind of bullshit coming from it. I want to be able to use this platform because my community has asked me to use this platform. When I left MT4, I asked everybody that was my community, I said, what platform would you like me to use? And they all, predominantly said this one. So I didn't choose this platform. My community chose it for me. Now think about this, okay? I know some of you can't get this. Some of you just cannot fucking fathom why anybody would do this, okay? But think about it logically. If you see me taking trades, okay, here's the historical tab, and it's only going to show you the trades that I did last night. These are the executions, everything is here. Everything here is directly related to what was shown in. I hear my puppy snoring like a. That's these trades right here. Okay. Everything here and what I recorded and shared on Twitter last night, that's this. Now, what happens? What happens if you work for TradingView? What happens if you have the access to see my account? Okay. I don't give a flying fuck if you feel this way, but this is how I view it. Okay. And because I have a measure of obsessive compulsive disorder, I don't want this in the back of my mind, because it's always in the back of my mind. So this is exactly what I do. I'm going to show you exactly what I do. I've shown this to my private mentorship group. This is exactly what I do every fucking day in TradingView. I do this every single day. Do you see any red here? Do you see that? No. Every session, every new session start, okay? Sometimes I'll see a Yahoo say, oh yeah, show us the trade history, you reset. When I see that, I immediately say, okay, I'm going to keep the account active and I'll do another trade so that way they can see the previous session trade was still in it. And I'll delete the executions. I'll go to show the S&P contract and then come back to the NQ. Because if you do that and you reset your account, you won't be able to pull the old executions up. They won't be able to be retrieved. So because, and I'm going to say this for the last fucking time, and if anybody has a problem with this, you can direct them to this minute marker of this video, because I don't give a fuck anymore. I'm tired of it. I understand that a lot of people out there cannot accept the fact that I know what I'm doing, and you love to say I can't trade, and I love watching you type that shit out because it literally gives me a fucking raging hard on because you believe your bullshit, and I love it. But I want you to understand, if there is a way that TradingView can pull up all of my annotations, if I can pull up, listen, if I can sign out of TradingView right now and I saved, if I use the layout right now, I have naked. It was just simply me using a brand new fresh chart, and I marked it all up based on yesterday's analysis with Powell and all that. So I did everything in front of you live with all the markups. If I sign out of TradingView and I come back to it at a later time, a week later, these annotations that I left there are going to be waiting for me. Do you think that it's reasonable to assume that anyone in the right position of TradingView, that they can go into my charts and see what annotations I have noted? It's pretty reasonable to anticipate that that is likely, very likely, right? Because if I can pull up the information, why shouldn't they be able to do it? Now, take it one step further. What happens when I have an account that they have clearly seen me fucking run these things up? I've proven it with my private mentorship. I've ran up an account. I've showed the entire full history. I've done huge fucking runs, millions of dollars in these things. Okay. I don't like the fact that they could very easily do what many of you do with your funded accounts. Put a trade copier on it. So I am of the belief, and I mean this in all sincerity, but still to the point where I know it's going to be nauseating to sound narcissistic and egotistical. But there is nobody on this fucking planet is going to be able to trade like me. They're not going to be able to trade like me. Not as consistent, not as perfect as I can be, as I want to be. I can turn it on and turn it off. But here, I'm at a disadvantage because I'm inside of their realm. I'm inside their little circle, okay? And they can see everything that I'm doing at the moment. So what I do is to keep these motherfuckers from doing that, every session when I'm done showing an example, watch what happens. Ready? I go over this little box or this little gear thing here, okay? I click on it. And then I do this. Watch this, right? It costs me no money at all. It's free. Watch that. Ready? Look. Watch what happens. Ready? It's gone. It's gone. I've proven this with my private mentorship students because I've had students there too say, how do we know? How do we know? I'm telling you, I reset every session. After I make a winning trade, I delete the fucking account and start all over again. I don't give anybody at TradingView the opportunity ever to copy me. And then what I'll do is, because I've created a new account, I always do this. Watch, pay close attention. Now, because it's reset, I go over here and then I'll go to the chart. And then I'll add this. And I'll say, okay, right now I want to go long. Don't follow me, by the way. Please don't do this. I'm just telling you what it is I do to keep these people from ever wanting or trusting that they can copy me. I want to go long right now. So I'll buy that. And let me show you the orders and stuff. Now, you might think this is a little paranoid. I'm sorry if you think that way, but I know if I had access to following somebody like myself, I would fucking do it. If I could put a copier account on somebody like me, and I'm actively in here running mentorships and proving that I could trade, and I'm going to go out with the intended purpose that I'm going to try to do well. If I could put a copying account on that, I'm absolutely fucking going to do it, and I would risk getting fired doing it. I don't give a fuck. I don't give a fuck, because whatever this guy ICT is doing in his account, whether it's demo or not, and he's making 20, 30,000, 40,000, $100,000 account moves. Come on, man. If I'm leveraged up on that with a funded account, I'm done. I'm the world leader, right? I'm done, and it's done inside of a month. So in my head, that's what's going on. So I have to go through this process of saying, okay, I need to throw them off, and I do this. It helps me. It helps me discard all these things that are very distracting to me, because my mind is going 100,000 miles an hour all the time. And while I'm talking to you, there's several different topics that are trying to fight to get to the front of the line. So I can't have anything distracting me, or it's going to mess me up. I won't be able to focus. Like, I can't focus if I know that I'm running the same account through TradingView in a demo account. I know that there's a potential for them to copy me for the purpose of just copying me with a funded account. They don't have to necessarily be risking any real money. They're just risking, I guess, the reset fees. But be honest for a second, okay? Just for a sec. Even if you don't fucking like me, if you don't believe me, if you don't trust me, you think I'm a fucking guy that lives in a gutter somewhere, some fucking slum, whatever you want to think about me, put yourself in my position, okay? Say you could actually trade. Just suspend your disbelief about whether you think I can trade or not. What happens if it was you and you knew how to trade and you could trade really, really good? Would you feel comfortable knowing that anyone at this company could do it and I would never know? I would never know. You would never know. But because my mind thinks this way, it's a fucking problem for me. It's a very big problem for me, which is the reason why I tell all of you, when you follow my live stream and I'm giving you commentary and it pans out and you've taken live trades with that, with money, please don't tell me you did that, because it fucks me all up. I don't want to know about that, because every single time I do something in a live stream, I'm going to be worried about you. Did you over leverage? Are you going to follow what I'm doing? And what happens if I'm wrong? What happens if I get a case of the ass and I'm like, you know what? I'm going to show this person, don't do that. You don't know what it's going to happen. You don't know how I can turn and flip. Okay. I can swing from one spectrum to the next. So to keep me balanced, I do something like this. I'll go in here. No reason to get into that trade. Tell me what in my repertoire tells me to be long there. Nothing. But what I'll do is I'll put that on, and then I'll go right down here, and I'll reset again. And then I'm set for the session. And then I'll go in and I'll look for my execution for my private mentorship, or if I'm sharing something, or if I'm practicing. So that's the truth. That's what I do. That's why you don't get to see the history tab. But, okay, for a week, the final week of our trading before we go into the holiday break, which is the last week of this, what is that actually? So the Halloween, no, was it the 1st of November? I'll give you the 1st of November. That's our last live stream, okay? The week of October 28th, 29th, 30th, 31st, and November 1st, I will show you every single thing that happens on the historical tab on one account, okay? So, well, that's not 30 days. That's not 3 months. That's not 6 months. I don't owe you that shit, folks. If some of you honestly believe that you're entitled to something, you're not entitled to me talking to you at all right now, let alone fucking giving you anything else. Like, you need to dial back that shit. Like, you think that you're so significant that other people, let alone me, are obligated to bend to your expectations and your will. Like, fuck you and your will. Fuck you and your expectations. I'm here because I want to teach my kids. That's the whole reason why these videos have ever been produced. It's for them. You're just fortunate enough to be listening to it. So now let's go in, type out the disclaimer. Okay, so hopefully this is going to be, we're going to actually do this on a one chart run. That way nothing can be taken out of context with another chart. And that's not what I want to do. So let's magnify that one. All right. So that way everything is here. And everybody understands now. Audibly one more time, because I want to be able to know that I've said this ad nauseum. Please, please, for your own sake, do not copy me with a live account. Please do not copy me with a funded account Combine. Please do not copy me with your funded account. I promise you, if you do this, you're gonna incur losing transactions or trades, and that's going to mean that you're going to lose money. Please don't do that. The purpose is to teach my son how to place a limit order, how to put the stop loss in, and how to put a take profit in. So everything is removing the necessity for market orders. Okay, so I'm going to change this to 1. All right, and everything that I execute on, I'm going to keep this up here so that we can see it's not market replay, and you can see that the little button up here is showing that it's the market is open. You all are here live. Okay, so however many that are here, you're seeing what I'm seeing as it happens. Actually, let's do this. Let's take a water closet break. For some of you that don't know what that means, it's a bathroom break. That way I can continue until 10:30 unhindered. So what I'm going to do is I'm going to type out that we're taking a 5-minute break. And we will be muted for that duration. I'm going to go relieve myself and come right back, and then we'll be at it